All right, what is up, traders? What's up, tycoons? Time for another natural gas video update. Now, natural gas is actually up right now, doing pretty good, having a decent day. So I'm going to break down some of the key levels. All right, we're going to do some nice technical analysis on it. Make sure to smash that like button and subscribe to the channel if you guys are new and you're looking for a channel that's going to provide updates on natural gas and the natural gas news every single week. This is definitely going to be the place for that. So starting off, we're going to be looking here at the monthly chart. All right. Now we have our overhead supply zones. Okay. And supply zones are simply an area where there's an imbalance of sell orders. And you can see that after we dipped back down into our demand zone here very shortly last month in February, we quickly shot back up. Okay. And we actually formed a hammer reversal candlestick pattern. Now, the thing about this that we really need to be aware of is that this monthly candle right here, which March still has plenty of time left to go, it needs to close above the high for that really to be validated and for it to actually start any type of possible reversal. And we did actually wick up here, all right, to these higher levels. But ultimately, this supply zone and this area of sell order imbalance is still pretty strong and continuing to drive price lower on the larger time frames. Okay, so the zones really are going to be about 220 up to about 260 on the natural gas futures, and above there about 320 to about 360. So those are the two major overhead supply zones on the large time frames that I'm really paying attention to. And below there we have a demand zone from about 160 to 120. Now those are just rough areas, okay, not the exact precise levels, but you can see that clearly we have an area established of demand here in the past where we've pushed up multiple times. Each time we test that zone over here, we push up higher. All right, we come back and test it again. If we push up higher, retest it, and then ultimately head up higher. Now, if we zoom in a little bit, all right, we can see here that we have our supply and demand zones here. So here's that demand zone, wick, candle, right? So we dipped down into demand one day and got a very strong response from buyers. Okay, that's pretty good. That's a good sign that we want to see, that we're looking for, is we're looking for demand to step in our area of demand, rather than, no demand, no buyers be there and us just consolidate and drop lower. Right, you can see the zones a little bit more in detail here. But yeah, so we got a very nice push and we've been setting up an inverse head and shoulders, right? So I've been showing that on like the Boyle chart and UNG, but I just wanted to show you guys it's definitely there on the natural gas futures as well. Okay, so we got our left shoulder, we got our head, we got our right shoulder here. And things are looking good at the moment. Okay. And we could get this inverse head and shoulders to play out and take us up towards the top of our supply zone, which would be around the 260 area on the natural gas futures. So be on the lookout for that. Now, just because it's formed doesn't mean it's confirmed yet, right? If we consolidate here for a really long time or we break back down, it's definitely going to invalidate the natural gas futures inverse head and shoulders. So I'm not telling people to buy it just because there's a pattern forming. Of course, none of this video is going to be financial advice, rather just breaking things down and going over some of the key levels that I'm watching personally. YouTube is not the place for financial advice. Now, this is the 4-hour chart, and I mentioned this here previously in one of my last videos as well. We had this rising wedge on our 4-hour chart after hitting demand and coming back up into our supply zone, and we got a break of the trend line, retest, and we started to push lower. Now we had this line in the sand here of 209.3. And yesterday or Friday, maybe even, we actually broke through that line in the sand, and it looked like we were going to start heading down to fill this gap. Now we have a gap in between this candlestick and this candlestick, and these gaps, they tend to fill about 90% of the time. The big question is when they're going to fill, not so much if they're going to fill. And so, below 209.3, we're looking for the gap to fill. Now, these gaps can also act as areas of support or resistance, okay? Because there's not really any orders in here, right? And so the orders are above and the orders are below. That's why it gapped up. So you can see that actually once we came down here, we actually established a little bit of support in this area, and it was a strong support area at the top of the gap, and we're pushing back up and we're above that line in the sand of 209.3. So above there, I'm a little bit more bullish. We could consolidate and try to head back up into our overhead supply zone. But ultimately, if we break below that level, that's when I would be looking and expecting the gap fill onto the natural gas futures down to about 190. Okay, is going to be roughly the area for that gap to fill. Now, this right here is going to be the spot price of natural gas. And so what we have is we have our MACD right here, and we also have our relative strength index. Okay, and you can use these to spot multiple signals for entries and exits on the chart. So I'm going to break down for you guys how to do that. And what you want to look for is divergences along the RSI, which is your relative strength index. So what I mean by divergences is take a look right here. We have a high and then we have a higher high. Okay, so the price of natural gas is clearly making higher highs, but the RSI is making a high and a lower high at the same exact points. So losing relative strength as the price is going up, that would be known as a bearish divergence. And you can see, sure enough, the bearish divergence played out and we had a strong move to the downside. If you combine that with the MACD, it helps become more effective. None of these strategies are 100% guaranteed, but if you can combine one or two, even more, 3 or 4 strategies together, then you can give yourself an edge and feel a little bit more confident in your play and in your decision making, right? So what I mean by that is we have the bearish divergence, and then we also get a crossover to the downside on the MACD where this red line crosses down below, okay? And ultimately, now we have 2 signals indicating we could see some bearish activity, and sure enough, it plays out. Same thing happens over here, but in the opposite side, right? So here we're making a low and then a lower low, right? And then the RSI is making a low and a higher low. So the price is increasing in relative strength as price is actually going lower. We see the MACD right here cross up above that blue line, and sure enough, we get a very strong move. Now, this happens multiple times, okay? Over here, higher highs, RSI, lower highs, MACD crossover, big move to the downside. All right, we get bullish divergence, higher lows, lower lows on the price, and then a crossover right here, strong move to the upside, higher highs, lower highs, crossover to the downside, very big move to the downside. All right, and we had initially a little bullish divergence right here that, popped us up. All right, we started rallying, and then we really just been collapsing and tanking ever since. And one of the signals we had was the bearish divergence right here with higher highs and then lower highs on the RSI, as well as a MACD sell signal right here where the red line crossed below that blue line. You can see we've had a very big move to the downside, and in my opinion, it's been a little bit over exaggerated. Okay. So currently what we have and what we're looking at in the signals why I started grabbing a position in UNG, the natural gas fund, is we had a low here, then we have lower low here. And if we look at our RSI, we had a low and we had a higher low. So we're building relative strength. All right. And we have a bullish divergence on the RSI. We got a crossover here on the MACD. Okay. And we've started to see a little bit of upwards direction. Now, just because something has worked in the past does not mean it has to work again. So just because all of these divergences combined with the MACD signal has worked, it doesn't mean that it's always going to play out. So you do have to be cautious of that and very mindful. All right. I'll go over the major support levels and resistance levels that I'm looking for on the spot price of natural gas. But the last thing I want to mention is that, this initial bearish divergence that we had right there, we broke out past that trend line and we're testing it again right now. So we really need to stay above this red bearish divergence trend line and either trade sideways or trade up. All right. That's going to be a little bit of a bullish signal because you can see here, once we broke this bullish divergence trend line, that's when we got a big move in the price down. Okay, same thing over here. When we broke this bearish divergence trend line, all right, that's when we got a nice move up in the price. Over here, same thing, break that bearish divergence trend line, all right, and you can see break, retest, and then push up, all right, and that's when we had a nice strong push to the upside. And over here, ultimately we break that bullish divergence trend line in this area, we head down, and then you see we head down in the price. So, this is something that we need to be aware of. We don't want to see a look above and fail. And that's important because bulls were presented the opportunity on the breakout when we looked above. And if they fail, it just shows that bulls really don't have control, and rather it was a false breakout. Bears are still in control, and we could push back lower. But the main thing, even if we do push lower, we want to continue to bounce off of this bullish divergence trend line that we bounced off of here and here. If we break through this level, okay, and flip that from support to resistance, natural gas is going to be in a pretty bad shape, right? And it's going to be down probably a significant amount. Now, when it comes to the major levels that I'm watching, I have 332, I have 279, I have 243, 2.2, and 1.87. And you can see that we're bouncing, off of this 243 level right here. And so that's a pretty good support level at the moment for the spot price. We bounced off of it here and here twice. And we bounced off of that 2.2 region over here as well. And we flipped that 2.43 to resistance. All right. And now we flipped it from resistance back to support. We want to continue to stay above that level, break through 279, and we have the chance of heading up to that $3 area right around 332. Now, we're actually in a trade, or I actually just closed the trade before, recording this video, but Boyle had a really good setup, and I posted this setup in the Discord over the weekend, right? We had this falling wedge. Okay, so we have our falling wedge right here. This is the chart pattern of a falling wedge. This is what you're going to look for, and we got the breakout today. Very, very strong move. Boyle was up about 13.5% at the time of this recording, and you see we had a very strong move. This is the 1 hour chart. It's a smaller time frame than most of the other charts we were just looking at. On top of that, we had bullish divergence on our RSI. We're creating low, lower low, right? And then we have low, higher low. Okay, and we also had bullish divergence on the MACD with a low here and a higher low here. So, you can see why I really spot divergences and look for divergences. It's a very useful strategy that you guys can implement. Okay, and if you want to join the Discord, all right, this is what it'll look like, right? So this is that Boyle play. It was up 25% on those, closed those. All right, just a day trade, nothing crazy, nothing dramatic. All right, I'm not out here, looking to capture 500% and not take profits or anything like that. This was simply a day trade. I do have my UNG shares position. Okay, that one is green too as well, up 5%. And this is me calling them out in the Discord. So if you want to join the Discord, the link is in the description below. If you use the code Zackley, like the channel name Zackley Trades, it will get you a discount on your membership and you can get in. I'm not trading natural gas every single day, guys. I trade a lot of other stuff. But as you can see, this is what it'll look at. Boyle, I got in the Boyle calls early this morning after watching that setup over the weekend. Sold half here, 25%, and then I actually just closed the rest of the position right before recording this video. And then these were me adding my UNG positions, right? You can see I started on February 7th, and then February 22nd I added some more. All right. So yeah, enough of that. Not trying to shill too much to the Discord, but if you guys are looking for somewhere where you can get access to my thoughts and see, what it is that we're looking at in the Discord, there's 3 other admin traders in there as well as a plethora of resources that you guys really, retail traders really don't have access to. Okay. Lots of good stuff in there. This right here is going to be the UNG ABC structure that we're tracking, or that I've been tracking on the daily chart. And so your wave C right here, which was at 752, this hit, and you can see in that last slide, I ended up getting some shares of UNG right around 753. That's where I was looking to add more position. And the reason being was that was our C extension, which that was our C wave target of 752, which is right around the 1.0 extension of your wave A to B, right? So we tend to see 3-wave and 5-wave moves in the market, and we got this very large 3-wave structure to play out, and we started putting in a little bit of a bottom. Now we did dip below that 753, but temporarily we do have a slight bottom right around that $7.15 area. And so what I'm looking at now is, or what I want to go over next is going to be the fibs. Okay, so there's 3 major levels that you want to pay attention to. The 3 most common and well respected are the 61.8, the 50%, and the 38.2. All right, those are the 3 most common. There are plenty of other retracement levels, but I'll go over how to use the fibs and why I use the fibs. It really helps you establish trend continuation because nothing moves in a straight line down or in a straight line up. So for instance, we have a swing high here connected to a swing low after this sharp move down. We retrace up to the 61.8% level, and then we continue that trend, right? And we continue to really do that, right? So after we reject our major retracement level here, we end up retracing to the 50% retracement level, reject that, could put in a lower low, lower low, then we retrace up to the 61.8, and then we continue heading lower and continue that trend. Now, it's been a really, really big move to the downside, and we haven't really had any type of retracement at all until we put in that temporary bottom at 715, and we've started to move up. So If we continue to, retrace on a larger scale, okay, our 38.2% retracement level is going to be at 1271. Our 50% retracement level is going to be at 1443, and our 61.8% retracement level is going to be at 1616. Now, there's no guarantees we're going to get a full retracement and that we won't head lower or just move sideways, because there's still a lot of overhead resistance that we're going to be battling, right? Specifically, 904 is going to be a major resistance level. 1031 and 1167 are the major overhead resistance levels that I'm paying attention to when it comes to UNG. And then 822 is really going to be a big support level. We're trading above that level right now. But we also have some of the same MACD and RSI signals here that we were using on the spot price of natural gas. If you take a look, we have higher highs over here, lower highs on the relative strength index, okay, bearish divergence. Then we get a MACD crossover to the downside, and we get a sharp move to the downside afterwards, all right? And over here on the MACD, we have a slight bullish divergence as well, right? We have a low, we have an equal low while we're making a low and a higher or lower low. So price is going lower, MACD is remaining flat, RSI is remaining flat, creating equal lows. And here, even recently, we put in a low and then a lower low right here, and we actually put in a low and a higher low. So if things do continue to pull back or start to pull back again, I'm going to be looking for a bounce off of these two bullish divergence trend lines and see if we can continue bouncing off of those trend lines. One thing we need to be cautious of is our MACD right here on the UNG. It's very close to curling to the downside. It's very, very tight. And whenever you see them tight, you typically tend to see a big move. So this thing could curl to the upside and we could get a nice pump up to the upside. Or if this thing crosses below, that's something that you definitely want to hedge yourself for, right? If you're trying to go long on natural gas, you want to have some type of a hedge, or maybe even just cut your position to manage some of your risk, whatever fits your own personal risk profile. These are just some different things to consider. Now, this is our UNG inverse head and shoulders, just zoomed in a little bit more with the fib targets up above. And you can see our major resistance levels a little bit clearer here. And you can see how they were tested and validated many times in the past over here. Ultimately, we broke through those. We broke through this level again. And then we actually just broke up to the upside, pulled back down. And so we have our left shoulder here. All right. We have our head right here, and we've got our right shoulder. So, it's going to be really interesting. Will this play out? Can we get this inverse head and shoulders to play out? We need to break 904 when it comes to UNG. And if that plays out, we could head up back to that $10.31 region. Otherwise, if we break below, this right shoulder right here, there is a strong chance that we're going to come back and retest our previous low around that 715 area. And so if we do that, I'll go ahead and update you guys with the price targets down below. Remember, keep an eye on that MACD. We want to see if that's going to give us a signal, whether it's an entry signal or an exit signal. It's starting to squeeze up real quick and get really tight. Now, this is BOIL, okay? The BOIL, the daily chart levels, all right, and the MACD and RSI. Very similar stuff. Okay, the MACD is very close to curling to the downside. Definitely need to be cautious of that. All right, but we do have the bullish divergence as well as some of the similar signals that we've gotten when it comes to the MACD and RSI. All right, we're putting in lower lows, and we're putting in low, equal low, and then we actually started to create a little bit of higher lows on the relative strength index. We did get a crossover here recently, but there wasn't much follow through, right? And the bands have been really stick together, close together, versus over here, whenever it provides a clearer signal and it really creates some space in between them, even to the downside, creates some space. You can see we curled up above, but we've continued to head lower, and it's been a really, really tight. So, definitely be mindful of that. That could be a good indicator of a big drop if it ends up happening, or we could see this thing really push back up to the upside and get above zero. Now if we zoom in a little bit more, this is going to be the BOIL inverse head and shoulders that I'm watching. Okay, with the left shoulder, the head, the right shoulder. We've got that right shoulder putting in here. We really need some follow through. 795 is the big major overhead resistance. Okay, if we're able to break out through 795, then that's when we could come back up to the $12 to $13 region. Most likely right around 11. So I'd say about $11 to $13 is going to be that area that we could come up to. on Boyle if we get the inverse head and shoulders to play out. But yeah, just keep in mind of the MACD. Definitely pay close attention to that. If that thing does curl to the downside and the RSI starts to head lower, look for a potential bounce off of this green trend line here, our bullish divergence trend line. Hopefully you enjoyed this video. If you did, smash that like button, subscribe to the channel. Remember, I'm doing natural gas videos every single week. So if you want a channel for some constant updates and where to look at, this is definitely going to be the place. All right. And now 435 is the recent lows that we put in on Boyle. So if we break this right shoulder, we could come back down and retest 435. Potential for a double bottom there if we retest 435. Otherwise, if we break 435, we could come down to about 320 per share. And that's going to be my next major support level that I'm looking at, and going to be debating whether I want to start some type of position on Boyle right around that 320 area. So appreciate y'all watching it. If you made it this far, I really, really appreciate you. Okay. And most likely you're going to enjoy one of these next two videos as well. So make sure to click on one of those.